Example health insurance claim using real dollar amounts. Now that you understand premiums, let's talk about claims. Here are the learning outcomes for this video. By the end of the video, you should 1. Understand how to apply cost-sharing concepts to a real claim. 2. Understand that health insurers negotiate lower costs for healthcare. 3. Understand how disastrous it can be if you don't have health insurance. And 4. Remember that premiums also factor into money you'll pay out of pocket. Let's get started. When an employee with health insurance incurs medical expenses and wants the insurance company to pay some or all of them, this is called a claim. As we've learned in previous videos, there will typically be some cost sharing with a claim, meaning the employee will pay some costs while the insurance company will pay the rest. We've already learned health insurance cost sharing vocabulary such as deductible, coinsurance, and out-of-pocket max. Now let's use an example claim with real dollar amounts to illustrate how this cost sharing works. For there to be a claim, that means something happened to the employee necessitating medical treatment. Let's use this example. Imagine that you break your leg while mountain biking one weekend. You're taken to the hospital in an ambulance where you're admitted to a room. Once in the room, a doctor comes in to administer anesthesia. While you're unconscious, another doctor performs surgery to repair your broken bone. Finally, a team of nurses cleans your leg and puts on a cast. You wake up later that day and are discharged from the hospital. For this scenario, let's assume that you have health insurance provided by your employer. Here are the cost-sharing details of your insurance plan. The plan deductible is $800, meaning you must pay the first $800 of claim costs before any insurance kicks in. After you've met your deductible, claim costs are paid 80% by the insurance company and 20% by you until you've paid $4,000 out of your own pocket. If you pay more than $4,000, then the insurance company should pay 100% of covered claim costs after that. Now let's go back to your injury and subsequent care to figure out how much you'll have to pay. First, let's assume this is your first claim this year. As you can see, you incurred 5 different categories of medical expenses to treat your broken leg. These expenses add up to $4,800 and include the cost of the ambulance ride, the hospital room, anesthesia, surgery, and the cast. Since your deductible is $800, you'll be responsible for paying that. That leaves $4,000 of remaining claim costs. Because you've met your deductible, now coinsurance applies. Of the $4,000 remaining, you'll pay 20% or $800, and the insurance company will pay the remaining 80% or $3,200. So the total money you'll pay out of pocket is $1,600, which is made up of your $800 deductible and your share of coinsurance, which was also $800. Obviously, health insurance was a financial benefit here because you only ended up paying just $1,600 of the $4,800 that was owed. I want to briefly show you how financially dangerous it can be to not have health insurance. I just told you that the total healthcare cost for your broken leg totaled $4,800. One of the benefits of insurance is that the insurance company pre-negotiates the price of many healthcare expenses with providers in order to keep claim costs low. So that $4,800 represents contracted savings. If you didn't have health insurance, then providers would likely charge you much more. Here I'm showing that the total charges without insurance would be $17,000 instead of $4,800. Even though the total claim costs were $4,800, after cost sharing, you now know that you'd only be responsible for paying $1,600. But once again, if you didn't have insurance, then you couldn't share the cost of healthcare with an insurer and you'd lose out on the insurer's contracted savings, meaning you'd owe the full amount, $17,000. It would be financially catastrophic to owe $17,000 instead of $1,600. That's literally over 10 times more money than what you would have owed with insurance. A quick reminder about premiums. In the premiums video, I gave an example of a single employee paying $2,340 per year in health insurance premiums just to maintain the insurance. Let's assume that employee is you. Those premiums also come out of your pocket, even though they don't count against your out-of-pocket max. So really the cost of the claim in this video isn't $1,600, but $3,940, which represents the claim cost plus the premium cost. That's the end of this foundational video, but just a reminder that this video is part of a longer playlist. The playlist is in chronological order, meaning videos at the beginning of the playlist cover things that occur at the beginning of a job search and vice versa. If you liked this video, then you should check out the other videos in the playlist. If you thought this video was confusing, then try going backwards in the playlist to learn more about job search up until this point, or even forwards in the playlist to see how things come together. Thanks.